In two recent videos, I suggested that consuming a politically unbalanced media diet could negatively affect your long-term investment returns. The more strongly people buy into the rhetoric of their particular political party, the more difficult it is to be pragmatic about their investments. Now, I've witnessed this play out with every presidential and midterm election that I can remember. Without fail, a number of investors always become very fearful of an economic Armageddon if what they view as the wrong presidential candidate wins or the wrong party takes control of Congress. They typically want to liquidate their portfolios ahead of the political and economic disaster that's undoubtedly going to unfold and sit safely on the sidelines, waiting until, air quotes, things are better before jumping back in. Rarely, if ever, can an investor tell me the metrics around when things are better. This year, I know of several investors that were afraid that the midterm elections would usher in widespread instability and unrest. Some believed if the Republicans flipped the Senate and the House, that would cause the economy and the stock markets to crater. Others believed if the Democrats retained control of Congress, that would cause the economy and stock markets to crater. Polarized investors ubiquitously are worried that if the candidate or party they oppose wins, it's going to be devastating for the markets and their portfolio. So here's what I've done to protect my own investment portfolio from a possible election day disaster. Nothing. I don't believe, and neither does the research support, that either the Democrats or the Republicans gaining control of the Senate or the House will make any long-term difference to a diversified investment portfolio or the stock market. Historically, the stock market returns tend to be lower for the first 2 years following a presidential election. So this trend has continued for the first 2 years of the Biden presidency, with the S&P 500 index down 0.75%. Now, conversely, the 2 years before a presidential election, stock market returns tend to be higher. This means history favors the stock market doing much better in 2023 and 2024. Research finds it doesn't make much difference which party controls the Congress or the White House. And I know for some of you, this is hard to believe. But to support this theory, an article from U.S. Bank on October 11th, 2022, found that the S&P 500 index has historically underperformed in the year leading up to the midterm elections. The average annual return of the S&P 500 in the 12 months before a midterm election is 0.3%. That's significantly lower than the historical average of 8.1%. The article found a different story after the midterm elections. The S&P 500 has historically outperformed the market in the 12-month period after the midterm elections, with an average return of 16.3%. Now, this is especially true for the 1 and 3 month periods following the midterm elections, which historically have significantly outperformed years with no midterm election. History also finds that markets don't care very much about what political ideology a president subscribes to. According to the 2019 Dimensional Funds Report, the market has been positive overall in 19 of the last 23 election years, only showing negative returns 4 times. But, and maybe somewhat surprisingly, markets have historically preferred Democratic presidents over their entire term. So since 1929, the total return of the S&P 500 has averaged just over 57% under Democratic administrations and just over 16% under Republicans. So, excuse me, that's why, viewed in the context of your long-term retirement portfolio, you don't need to worry about who controls Congress in 2023 or who becomes president in 2024. Could there be some short-term swings in the stock market? Certainly. Will the name and party affiliation of the next occupant of the White House make a difference in your investment portfolio overall? No. As usual, the best way to election-proof your portfolio is to leave it alone. This logical advice can be so difficult to believe if your media diet isn't balanced. Rarely, if ever, do events unfold in the way polarized investors fear. Thanks for joining me.